This is quite the comeback for stocks. When you were in the depths of it in the middle of December, if you would have predicted we would gain back everything, now back to October levels for the S&P, up 20% from the lows?
About October 9th,
Would you believe that?
So you've really gotten rid of that entire sort of free fall phase of the fourth quarter decline. Toso, by the way, I'm calling it, it's tired of sitting out. And I think a lot of the action this week indicated investors who, yeah, sure, they allowed for the fact we were going to get a big bounce off the lows, but the fact that it's been persistent, the fact that the indexes did not really back off when they got up to these levels that were seen as resistance, and it just sort of kind of slowly crawled its way higher. I do think you've had people recommitting to stocks to some degree, even if it's grudgingly. And that's why, because there's really been no economically relevant news that's going to change the picture all week.
Mike, I don't want to make light of the acronyms because I think this is actually important. But what comes first, TOSO or FOMO? Because it means
you're tired and then you're fearful.
I think this is less.
The question is, have we got further to run?
The fear of missing out, I think, is when the market is really starting to accelerate and there's a momentum move in it, and people are fearful that they just are going to be left behind. I think right now it's feeling more comfortable getting back involved with stocks. And really, it's the inverse of what we did see in December. As the market sold off more heavily and volatility gauges went higher, investors felt they had to pare back positions. Now, volatility keeps getting smothered lower, and at least it gives the impression in a lot of the models that it's safer to have a higher risk level.
Rebecca, how do you characterize the why behind a big move in stocks, really for the entire year, but an especially strong week?
I mean, I think you can boil it down to two things that you all discuss a lot on the show, and that's going to be a big change in central bank policy led by the Fed, but not just the Fed, obviously also the European Central Bank and China, and then hopes for a trade deal removing that piece of uncertainty from the market. I think the Fed's the more important driver, and it's not just the Fed pause, and we'll see what Mr. Powell has to say about that next week, but it's also the idea of this new inflation targeting regime, which could allow for lower rates for longer on a structural basis, and then the balance sheet. All three of those coming together at once means seeing the VIX volatility index sub 13 today for the first time since October. To me, that's mainly a Fed story.
Mike, what do you make about the fall in the VIX? Does it give a sense of complacency?
Not well. I mean, it's a level of comfort, obviously. We saw the VIX down around 12 in early October when the index was roughly around these levels. So it's not incompatible with where the market is right now. I think it's much more reflecting the fact that we've kind of gone to a slower pace in the market. There's not a lot of signs of financial stress in the system. Credit markets are holding together. And the obvious question, though, when you say, is there more to run? It's truly unclear, because really all the market's been doing is kind of feeding off this backdrop of low yields, patient Fed, slow but still positive growth. There hasn't really been that much movement in the story, except that the stocks have been just kind of grinding higher.
Rebecca, is there more room to run?
In the short term, sure, I think there could be. I mean, you're starting to see a little bit more signs of stabilization in some of the European data. People are hoping the Chinese data improve with all the stimulus there. A trade deal certainly is good news. My fear is we might get too much of a good thing. If economic data do stabilize globally, and it's really the manufacturing sector that's struggled the most, the consumer sector is doing a little better. But if things get better economically and equity markets and credit markets continue to run, I think we have to appreciate the risk that the Fed may decide it wants to hike at least one more time later this year. And Sarah, you know that's not priced in at all anymore. And that would be a little bit of a wake-up call. And then I think, secondly, the China deal, fine, if we get a deal, but what kind of deal? I think the details matter a ton. And we know the trade rhetoric isn't going anywhere. The enforcement of the deal, the currency, what about global autos? What about the U.S. with India? So I worry that we're going to get too much of a good thing right now. And maybe it's a few months away, but I feel like we might have a little bit of an awakening once we get to a place where the Fed wants to tighten, or we see the reality of the trade deal isn't quite as good as we had hoped.